Yes,
Yes.
sir. Yes.
Okay, so guys, what I explained you yesterday about the revaluation of assets and reassessment of liabilities by taking one example, that is this one example 13. Have you understood that? Did you revisit that? Did you revise? Did you check that yesterday? I'm asking you all. Guys, please be quick. We do not have time. Either say yes or no.
Yes.
Akshita, Abir, have you gone through this yesterday only? Again?
No, sir.
Why?
Yes, sir.
If you do not see, you have to stretch yourself, guys. You are not in class 7th, 8th, 9th, or 10th, right? You are in class 12th. And I told you yesterday specifically that you should go through this fully before you go to bed. And doing, you should have practice of doing this thing for every day, guys. I should not remind you this. So, Akshita and Anna, you understood everything out of this, right? Or you have any questions?
No, no, sir.
This was our second point, guys, for revaluation of assets and reassessment of liabilities. Now, the third point, the third adjustment. Okay, before that, I explain you one more thing by taking a small example. So this example I have taken to explain you specifically about daters. Okay, so here we will talk only about daters, that is about bad debts. Yesterday's example, we talked about provision for doubtful debts. Why? Because the point there about daters was this one, that daters are expected to realize only rupees 20,000. So for this, what we did, we increased balance of PFDD by 3,000 so that the net balance of debtors could become 20,000. And for that, we increased our PFDD balance by 3,000. In the balance sheet after this, PFDD is reflecting at rupees 5,000. Debtors were 25, so 25 minus 5 is 20,000. This is what we actually wanted. Correct, guys, or not? I'm asking, is it clear, guys, to you all? To Abir, Anna, and Akshita? Naman was not there, so I do not know whether he's understanding this or not.
Yes.
Sir, can
Akshita
you
and Abir.
tell?
Akshita, is it clear to you?
Yes, sir.
Yeah, Abir, you are saying something?
Sir, can you explain once again, sir?
What?
Uh, the concepts that I was like not able to understand.
See, here in the question in the balance sheet, we have been given PFDD balance of 2000. But upon revaluation, we got to know that debtors, we can recover only 20,000 rupees from debtors. We can. We are not very sure of it, right? It means the PFDD should be so that the net balance of debtors and PFDD is 20,000. To bring this in our books, to bring point number 6 in our books. And for that, we need to increase PFDD by 3,000 more so that it becomes 5, and then 25 minus 5 would be 20,000. And that is what we did here. We increased our PFDD balance by 3,000. Right or not, Abir? Have you understood it now?
Yes, sir.
The same increase is reflecting in the new balance sheet, that is balance sheet of the new firm or balance sheet of reconstituted firm. And because of this, the net amount of data is reflecting in balance sheet is 20,000. Means now the balance sheet reflects that yes, we are expecting to realize 20,000 from our debtors, right? However, this example is different from that one, guys. Here we clearly know that there are bad debts of 3,500. It is not the expected loss, it is the real loss. It is the actual loss, not the expected one, right? So, what do we do for this? What journal entries we pass for this? Let's understand that. So, I hope you have understood the difference between example 13 and example 14. Correct or not, guys?
Yes, sir.
Akshita, Anna, Falak, have you understood
Yes, sir.
this?
Yes.
So, what we'll do, the journal entry here would be two journal entries we will pass for this point of bad debts. The first would be for the bad debts. Now, bad debts means actual loss. Provision for doubtful debts means probable or estimated or anticipated loss. So, this point says that debtors of 3,500 have gone bad. We cannot recover 3,500 from them at all. Maybe the customer, the debtor has become insolvent or some other reason. So, for this point, we need to decrease our debtors by 3,500. And for that, we will credit debtors account with 3,000 and will debit revaluation account with 3,500. I'm sorry, not 3,000, 3,500 because the amount of bad debts here is 3,500. Right, guys? I hope you all have understood this point. In class 11th also you have seen that when in adjustment of final accounts you are given that there are bad debts of 3,500, what do? You decrease your debtors by 3,500 and you debit bad debts account. Later, the debit balance of bad debts account goes to P&L account on the debit side. The same is happening here. This is P&L adjustment account which is getting debited with 3,500 and debtors are getting decreased by 3,500. Am I clear to everyone? I'm asking guys, is it clear to you all?
Yes, sir.
Yes, sir.
Yes, sir.
Okay. Here we made PFDD of 2000. Why did we make this? Because we were expecting that there would be loss of 2000. But the actual loss is 3500, which has already been recorded here. So now there is no need of this anticipated loss. So we will reverse, we will decrease the balance of PFDD also for this point, and for that we will debit provision for doubtful debts account and will credit revaluation account with 2000. So by passing this entry, what we did, we debited provision for doubtful debts account, which earlier had a credit balance of 2000. So now PFDD account after entry number 2 has no balance left at all. So it's a loss, it is a gain for us. Right? If we make balance sheet here after taking care of revaluation, then in balance sheet our debtors will reflect that 25,000, which was a debit balance in debtors, minus 3,500. That is 21,500. I'm writing it here for your understanding how we got this 21,500 here. So this is the overall treatment of this point. Have you understood this, guys? Everyone?
Sir, can you explain this again?
Which one?
The second entry.
Okay, suppose recall your knowledge of class 11th accounts, right? For the chapter final accounts that you all learned in class 11th. In trial balance, you have already been given balance, credit balance of PFDD, provision for doubtful debts. And below the trial balance in adjustments or in additional information, you have been given 1 point of bad debts. What do you do for that? If only these two information are given. In additional information, there is no information about making any provision for doubtful debts. No. In trial balance, you have been given trade balance of PFDD with 2000. In additional information, you have been given bad debts of 3500. How will you incorporate this in your final accounts? I'm asking you guys. The same thing we have done here. So first recall that. Once you recall, I will explain you why we have done this. Are you able to recall, guys, out of your memories of class 11th? Ana, Akshita, Abir, Falak, Naman. No one can recall this, guys. In class 11th, what you used to do with such information is this bad debts you show on the debit side of P&L account. And from this, below this, you write in the internal column less provision for doubtful debts with 2000. And because of this, in the outer column of debit side of P&L, the net amount that goes is 3500 minus 2000, that is 1500. Right, guys?
Yes, sir.
Yes, sir.
Yes, sir.
This is what, guys, you did in class 11th. So ultimately, in the outer column, the net effect that has gone is 1500 only. This provision for doubtful debt is not the one that you have made at the end of the current year. No. This you picked from trial balance. And when you pick PFDD balance from trial balance, it means it is the balance of PFDD at the end of the previous accounting year. And this is the treatment for that. So ultimately, your P&L account is getting debited with 1500. The same thing is happening here. P&L account got debited with 3500 and got credited with 2000. So ultimately, P&L account got debited with net amount of 1500. So, and why do we do this? Since we already know now what is the actual loss, we decreased our datas with the actual loss. And for the actual loss, earlier we made anticipated loss of 2000, which is not needed now anymore. Why? Because we have already recorded the actual loss. So we are reversing our anticipated loss by debiting PFDD account and creating revaluation account. Is it clear to everyone now, guys?
Yes, sir.
Yes. Yes, sir.
Sir, this entry we don't do for provision, the revaluation to debtors one.
No, see, you first you revisit what I taught yesterday. Without doing that, please do not ask any doubt. Right? You will have lot many confusion, and I will keep resolving your confusion, and you will have few more again, and we will get into a loop. Let's not do that. You first check what I explained yesterday. After that, you check this example, and then come back with your confusion. I am sure most of your confusions, doubts will not be there at all. Right? The other thing, Abir, when we understand a particular concept, you should not mix any other concept with that. Keep the concepts independent to each others, separate from each other. Have you got me, Abir, what I said?
Yes, sir.
Right. So first check what we did yesterday. You have not checked that yet. First check that, and then check this example, and then come out with your confusions or doubts. So guys, The net effect of this in the new balance sheet would be this. We have already decreased debtors by 3,500. So now the balance of debtors is 21,500. And since this has been reversed, this has been cancelled out by passing this entry, and the new balance sheet PFDD account will not reflect at all. So everyone guys, please note down this first. Done guys, everyone noted down everything till here.
Yes.
Yes, sir.
Yes, sir.
Yes, sir.
Abir, is it done? Ab- Okay, let's see guys, one more example related to this point only. Note down this example guys, example 15. to you all. So start noting this down. You all have noted down already this one, right, guys?
Yes, sir.
Yes.
Yes, sir.
Okay,
Yes,
so
sir.
start noting it down from here, guys. With this, finally, we are done with the daters and provision and bad debts part. As far as revaluation is concerned, this was our adjustment number two. Now adjustment number three. And this is for accumulated or undistributed profits. So the profits which have not been distributed among the partners yet, about them this point is. So those profits which have not been distributed among the owners yet, but have been retained in the business in form of reserves and surplus are called accumulated or undistributed profits. And in books of a business, they are found in form of general reserve. The other name of general reserve is reserve fund or contingency reserve. Investment fluctuation reserve, workman compensation reserve, and credit balance of profit and loss account. This is actually surplus. So what reserves you will come across as part of accumulated profits in your questions is general reserve, investment fluctuation reserve, and workman compensation reserve. The amount of investment fluctuation reserve that you will consider as accumulated or undistributed profits would be the one which is arrived at after adjusting for any loss in the value of investment. Now, what does this mean? I will explain you that a little later. Similarly, the amount of workman compensation reserve that you will pick for this point would be the one that is arrived at after adjusting for actual or anticipated liability for workman compensation. You know that credit balance of P&L account is presented on the liability side of balance sheet, right? Because in the liability side, all the items have credit balance. On in the asset side, all the items have debit balance, except the one which are being subtracted from any asset like this. This has credit balance, but rest other assets have debit balance. Is it clear to you all guys or not? Everything so far? I'm asking guys.
Yes, sir.
Yes.
Yes.
Abir, have you understood this? What I explained so far? Please do not ask any question out of what I have not explained yet. What I have explained so far about reserves and surplus, about accumulated profits, have you understood that?
Yes, sir.
Good. Okay, now what accounting treatment we do for accumulated profits upon admission of a partner? Let's understand that. Let's say a firm has these reserves and surplus in its books on the date of admission of a new partner. It means these are those profits which were earned by the firm by the old partners and were kept in the firm and not distributed to the old partners because they themselves decided that let's not have these profits but leave them in the firm only for any to meet any future contingency or for any future growth or expansion of the business. That time we would be needing funds, so do not take out the funds in form of profits. So they left the profit in the firm. So who has right on these profits? The old partners, the new partner, or all the partners? What do you think, guys?
Old partners.
Correct, right? Naman, Ana, Akshita, Falak. Have you understood this?
Yes.
Yes.
Right. So what do we do for this point is we distribute these profits among the old partners in their old ratio. That is what we have to do whenever there is admission of a partner in a firm. Before the new partner joins the firm, you should distribute these profits which are reflecting in the books of the firm in form of general reserve, investment fluctuation reserve, workman compensation reserve, and trade balance of P&L account. You have to distribute these among the old partners in old profit sharing ratio. Correct, guys? Since these profits were earned by the old partners and the new partner has no contribution in these profits, these accumulated profits are distributed among the old partners in their old profit sharing ratio on or immediately before the new partner joins the firm. For this, the following journal entry is passed. So you know that these items reflect on the credit side of, sorry, on the liability side of balance sheet, all the reserves and surplus. It means they have credit balance. So to distribute them, we debit these items. So we debit general reserve account, we debit investment fluctuation reserve account, we debit workman compensation reserve account, we debit profit and loss account, which has credit balance, and we credit old partners capital or current accounts in old ratio. So this is how we increase their capital or current account balances. Had these profits been distributed among the partners the day when they were earned, what effect would have gone to the partners' capital or current accounts, guys? Their capital or current account balances would have increased, means they would have been credited that time. But partners decided to retain these profits in the firm, and now since the new partner is joining the firm, the old partners does not want him to have any share in these profits, and that is why they decided to distribute the profits, and now they are creating their capital or current accounts. So the thing which they did not do earlier, now they are doing it. Is it clear to you all, guys? This point.
Yes, sir.
Yes,
Yes,
sir.
sir.
Abhi,
Yes, sir.
Rana, have you got this? Okay. There are many more things in this point, guys, but first understand the easier part, and that is what is here. Now start noting this down, everyone. Done, guys. Have you all noted down everything till here?
Yes.
Yes, sir.
Yes, sir.
Akshita and Abir, what's about you?
Done, sir.
Yes, sir.
So A here means you have to take that balance of investment fluctuation reserve account which has been arrived at after adjusting for any loss in the value of investment. Now, what does this mean? We will see that later. And here you should take that balance of workman compensation reserve which has been arrived at after adjusting for actual or anticipated liability for workman compensation. So note down these 2 points also, guys, and that's it for today. Then, guys, have you noted down this also?
Yes, sir.
Everyone,
Yes,
right?
sir.
Sir.
So, guys, we have covered many a things in admission chapter so far. You need to revise that very thoroughly, right? I should not remind you for that every day. If you do not do this, it's your loss only, guys, right? Naman, I have uploaded yesterday's video. Check that and note that down in your notebook. And in case you have any doubt, you can ask me tomorrow. So, guys, I'm ending the meeting.